Hello, welcome back to another video. And in today's video, we're going to talk about something that have greatly increased my trading performance, and it kind of simplify and give me a systematic way of trading my strategy, to be specific. And that is having a systematic way of mapping market structure. So it's going to be in series. This is just part one. And believe me, by the end of this series, I can pretty much guarantee you that your strike rate will greatly increase. You're going to skyrocket your win rate to another level entirely, simply because you will know how to manage your trade properly, where to enter, and where the market is coming from, where the market is heading to, and how to have clarity in the market in order for you to have confidence and hold your trade to that overall take profit. So if you're new to the channel, please support the channel by smashing that subscribe button, turn on the notification in order not to miss the next series that's going to be released. This is pretty much market structure masterclass, and it's going to cover 3 or 4 videos. So without much ado, let's dive into it. All right. We need to start from the basic foundation of market structure, and that is building a solid foundation on how to properly map market structure correctly. Believe me, whatsoever strategy you trade, be it ICT, smart money concept, trendline strategy, Fibonacci, whatsoever, supply and demand, whatsoever strategy you trade, if you don't understand how to correctly map out structure, you'll definitely be blowing accounts, and at the end, you might get frustrated in the market, probably quit. All right? Before you is a blueprint, is the basic step on how my strategy operates. First, I look at the market structure. Second, I plot out my trend line. Then I use the liquidity, but in this context, I don't use liquidity as other people use it. I only make use of the highs and lows of the market. We'll get deep into that. Then my entry strategy, then how to properly manage my trade. So you need a solid foundation on how to actually map out market structure. If not, every other thing right from this particular level to this level will be useless. This is the first step you must take, right? You must know how to map market structure. Now, you might look at this and say, okay, I know this, I know that. Trust me, so many of you are making serious and dangerous mistakes, causing you to lose account as a result of this basic market structure you are seeing right in front of you. Give me 5 minutes, 2 minutes, or 3 minutes. Let me explain in details what this thing is all about. Now, before we confirm that a particular price action is trending up, that price action must be creating series of what? Higher highs. Sorry, must be creating series of higher highs, higher lows, higher highs, higher lows, higher highs. This is what confirms to us that a particular price action is trending up. But before we can confirm that this high is actually the high, it must take out the previous high. This is a previous high you're seeing here, correct? This is the previous high you're seeing here. It must take out this previous high. The moment this price action move from this particular level to this level, then we confirm this particular zone as what? Break of structure. And you can see, if we take out this high, we expect a pullback. You expect a pullback occurred. Then this pullback led to another what? Break of what? Structure by taking the previous what? Highs. Now, this is the basic, the foundation of what? Or how the price delivers in the market. But realistically, once you open your chart, it's not going to look as textbook as this. You're going to come across something of this format here, right? And that's where the confusion normally comes in. This market is creating higher highs and higher lows, but where is the valid higher high and where is the valid higher low? And that's when we say, okay, a valid higher high is confirmed if that particular high break the previous what? High. You can see that this was the previous high here. This market moved from here and take out this high. Then we say that, okay, this is what? A valid what? Higher high. And this is what? A valid higher low. This market pull back. This becomes what? A valid higher low, and here becomes a valid higher high. Every other thing you see in the midst of this particular range you are seeing here, excuse me, this range and this range, come on, and this range here, everything within this range and this range is all internal structures. So all these things you're seeing here, they are not what? They are all internal structures. Let's go gradually. Now, this market move from here and take out this particular high here and create another high here. Where is the valid higher low? This is the valid higher low here exactly at this particular point. Why? Because it is the lowest point that led to this what? Higher high here. So this from here to here is just one leg movement. So every other thing we see inside of this level here is just what? An internal structure. So this external structure and internal structure we see, we call them the swing highs and the swing lows in the market. That is what we use to determine where the trend is actually heading to. I've received some charts mapped out by some people telling me that this is a breakout structure and they are looking for some level of demand zone or a pullback to this level and take a sell down towards this particular zone. That is wrong. That is totally wrong. Because until this market take out this particular low here, the trend has not changed. It is still speaking uptrend. That's why I used to tell you a break of trend line is not equal to a change of trend. It might be as a result of what? The price trying to pull back to a certain zone or level. But if you understand when a trend actually changes, you will know how to approach it. So overall, what are we looking for in the market? We want to know the swing high and the swing low. The swing high is that point that leads to what? A break of structure. So a swing low rather is that point that leads to what? A break of structure. So this is a swing low, this is a swing what? High over here. Likewise, this is a swing high, this is a swing low, this is a swing high, this is a swing low, this is a swing high, and this is a swing low. And this same approach is applicable to what? The bearish side of the market. Same thing here. If you look at this particular price action here, this market move all the way down here, break this particular previous low here, and drop down to this particular low here. This low, because it start pulling back, we confirm this one as a what? A valid low, and this as a valid higher low, right? So what we'll be expecting, just like what you are seeing here, is a pullback and a continuation. Then we can what? Draw our trend line. Simple, a basic market structure. But realistically, it's not going to be as textbook as this. So you'll come across something as complicated as this and try to understand the lowest point that led to that break of structure is called the valid higher low, and the lowest that pull back that particular trade is called the lower low. So between this leg and this leg, everything that happened here is not anything trend, it's just what? An internal structure. Whether this market pull back here and drop, right? Or it might decide to pull back and drop. But the reality is this price action must not break above this. If it break above this, we confirm it as what? Trend change. That will go deeper in it as time goes on. That brings us to the concept of the strong stroke weak highs and lows. Because I used to tell my students, market is always transferred from the weak hand into the strong hand. And that is how trend is being created in the market. This price action move all the way from here, pull back, break this structure, pull back, break this structure. Which side of the market do you think is strong and which side do you think is weak? In a bullish trend, the bears are always weak, and in a bearish trend, in a bearish structure, the bulls are always what? Weak. So you can see from this particular structure you are seeing here that these are what? Weak lows. These are weak ends. These are strong lows rather, and these are what? Weak highs. Why are they weak highs? Because once this market pull back, this side of the market is always broken. Then we call it break of structure. This one is a weak high because this strong lows goes to break the weak high, and we call it what? Break of structure. And this will continue until this particular price action break the previous low, and you can see that the trend has actually changed. So whenever there is a break of a low, it is simply transfer of strength. It's what? Simply transfer of strength from the strong to the weak. And I can tell you it's the same thing applicable here. So once this market is trending up, we don't want the lowest to be broken. No, we only expect the highest to be broken. Look at the lowest here. This low must not be broken. So even this market pull back down to this particular zone, but it should not break this particular level. Rather, it should bounce and turn back. That is our expectational order flow. That is what we should expect whenever we're trading in the market. So we don't know whether this particular price action will stop here, stop here, stop here, stop here. But we don't want to see anything of this form. Because the moment we have this, it is confirmed as change of what? Trend. And we'll get deeper as we go in, right? The same law is applicable to what? The bearish side of the market. So strong lows are those lows that cause what? Higher lows. And strong highs are those highs that cause what? Lower lows. Our goal is to identify the highs and target the weak. So we want to identify this high here and target the weak above. Same way in the bearish structure, we want to identify the strong lower highs and target what? The weak. Because no matter where this price action pull back to, it will definitely stop within this particular level and drop. And we expect this particular trend to continue just as what you are seeing on the chart. So do not map internal structure as external structure, just like what you are seeing here. Some people go and tell me, okay, the market is already trending up, trending up. Nope, it's not trending up, it's just internal. And they get whooped in the market and come back to say, oh, I messed up in the chart, or I messed up in the market, or the market is just what it is. It's not what it is. Your structure mapping is actually wrong. So you map it correctly. The lowest is what you're targeting. The highest is your area of interest, and you target the next low with what? Pullback, continue, pullback, and continue. So learn to identify the lowest point and the highest points of the price leg. That brings us to the concept of trend change. Change of trend or change of character, they have similar, in fact, they're basically speaking the same thing, but one is used on the higher time frame while the other is used on the lower time frame. And I'm going to explain. Let me get rid of this. This is where comes trend line. Not that you just walk up to your chart and start plotting trend lines randomly and you expect it to deliver onto your hand the way it should. No. Trend line work best alongside with market structure. Look at this particular price action move from here like this, pull back and break this structure. Pull back and break this structure. The moment you are seeing this particular kind of movement in the market, that is when you bring out your trend line and drop it respecting that particular trend. And when this price action is above this particular zone here, this particular zone you're seeing here, come on, this particular zone you're seeing here, we are not expecting a break. No, our expectation is for this market to pull back to some of this level or down to this trend line, give us an entry and continue this upward movement. That is our expectation. But you cannot control how the price move. Price move according to what the money is being loaded into the market. And suddenly you see a break of the previous low. Once you see a break of previous low, this market has been maintaining high highs, high low, high highs. Suddenly we see a break. This break is the first sign that there is a transfer of power within this period. That is transfer of strength from the strong to the weak. People consider this as a liquidity grab and they'll look for entry targeting the next higher highs. No, I personally don't do that. Rather, I work according to the structure printed right in front of me. The moment I have a change of character, just like a change of trend or change of character, just like what you are seeing here, I'm already looking for a way to plot my downtrend. And you can see how this trend line is perfectly placed. I'm already looking for a way to plot my downtrend, my trend line towards the downside. And I'm looking for a sell within this leg. So whether the market pull back to this level, or to this level, I'm looking for a sell, taking it downward. And this has highly skyrocketed my win rate. And that continues. I keep following the trend. You can see this market keep creating lower low, lower high, lower low, lower high, lower low. What happened here? A break. So once we have this break, this is what we call change of character, or change of trend. Then once you have this, let your mindset shift on the spot that this market has stopped trading down. Rather, it's now buying, buying, buying. Then we can look forward to the low, and this is the high. We see a pullback, then we see a push, we have a low and a high. Our trend line can simply be plotted just like what you are seeing here. And our expectation on this particular price action is for this market to pull back to this either trend line or any of this level and take out the next high above. Why do I say a break of a trend line is not a change of trend? Now look at it. We know that once we have this, until this low is taken, this market is still uptrending. So imagine you have a trend, a price action pull back to this particular trend, break it, and trend back to this low. Will you consider selling at this level because it break out the trend line? No. All what you're seeing is just an internal structure. Trend line is just an area and not a spot to be traded upon, right? So once we have this, we still look for buy to take out the buy. We still look for a buy setup to go and take out the liquidity residing above here. That brings me to the concept of liquidity that I personally use in my trading, right? The liquidity that I use is simple. That of highs and lows of the market. I know, all right, just like what we are having here, right? Some people call these as liquidity, right? They expect this particular leg, ICT fine boys. They expect this particular leg to sweep the liquidity and continue the upward movement, right? So I don't use liquidity in this format. Rather, I consider the simple highs and lows in the market. How the moment I have a higher high here, The moment I have a breakout structure and a higher high here, I know there is a liquidity resting above this thing, above this zone, and there's a liquidity resting below this zone. What I want is a market to pull back. The only liquidity I'm looking forward for to be taken is the one above. That is the wick above. That is in a bearish case. And in a bullish, that's in a bullish case. In a bearish scenario, in a bearish scenario, I know there's a liquidity above here, right? I know there's liquidity below here, and there's a liquidity below this particular zone. Which liquidity am I looking for to be taken? Is this one, because it is weak. I will expect a pullback and a break. That is all. Do not complicate your approach, right? So how then, let's tap into, there's a little difference between change of what? Trend and change of character. Change of trend is basically used on external and external structure, while change of character is used on a lower time frame that is basically focusing on the internal structure. What it does, it tells us that a pullback is about to kickstart, or the next push phase is about to what? Kickstart. That's what we usually use. That's why whenever I have a break, a change of structure, a change of character, I always look for what? Imbalance within this leg and take up my trade, because it tells me that the next phase is about to kickstart. Having done that, let's hop over to the chart and map this structure step by step on how I normally do it. All right, we're going to go random to any random position or any random movement, because we don't want this video to be that long, and we'll map it accordingly. All right. So let's start from right this particular point here. Right. So we see this particular price action trading down, right, creating series of higher lows and lower lows and lower highs. Lower lows, lower highs. Now, is this a lower low? Nope, it's not. This is just merely a pullback. So the valid higher low we are seeing here is the what? This is the valid higher low, and we have a lower low here. Somebody asked me before, do I consider wicks as break or body as break? I confirm body closure as break. So this is not where the market actually break. This is where the market change trend. So from this particular point here, I can easily plot out what? My trend line upward, this format, right? Once I have my trend line in this format, simply I'm looking for buys, but I must take into account where is the high and where is the low. The low is here, and what? The market pull back to what? This high and pull back here, and it's continuing. Provided the trend line gets broken exactly at this level, does that confirm that the trend has changed? No. Why? Because this is the low, this is the low, and what? This is the high. Everything that happened within this leg, they are just what? Internal structure, right? I'm expecting to what? Take a buy into up, in as much as this trend line gets what? Broken. If this happens, then I cannot adjust my trend line to fit this particular level you're seeing here, right? And we have a high. Let me get rid of this. All right, we have a high here. So we have a higher high, a higher high, higher low, higher high, higher low, higher high. Look at, from this particular point, what do you notice? All these are what? Break of structure, break of structure, break of structure, until that previous high is being broken. A structure has not been what? Broken. So this thing maintained this particular trend upward. Look at it. Not until we get to this particular point here, and what do you notice? Suddenly we see a violation what? Of the strong low. Then we now say the trend has changed, and that is what we consider basically as change of character or change of trend. Sorry. The moment this thing happens, then we begin to look for what? We change our mindset on the spot from buying into selling on the spot. Then we begin to follow the market as it ought to be, creating lower low, lower high, and lower low. Come on. Lower low, lower high, right? The market pull back down to this place, then lower high. Look at it here. This price action you're seeing here, until this high is taken, we are not ready to consider what? Buying. So everything happening within this leg here, the whole of this movement here, is just an internal what? Structure. Do not consider this that the market has actually what? Changed. These are internal structure. So till this very moment, we are all looking for what? Sell. Suddenly we saw this market expecting this low to be taken, and it failed. Then the high got broken. The moment this high got break exactly at this particular level, what comes to our mind? The trend has actually what? Changed. Then we look for where to place our trend line upward and start trading alongside with that what? Trend line. Then we can now target the what? The next high above, actually, right? So you can see that this market pull back to this level and continue this what? Movement until what? This high get what? Violated. And this movement continue, and look at what happened here. Before we begin to experience this downward movement, there is what? A change of trend. So change of trend, that's when the strong lows or strong highs get violated. Right? So let's dive into simple example on how we can actually what? Trade this particular what? Concept effortlessly. And we're going to use this particular example you are seeing here. Let me get rid of this error. So we'll go down to the lower time frame and try to pinpoint how we easily identify change of character on the lower time frame, right? We know that our trend line is here, right? Trend line got broken exactly here. Are we supposed to start looking for a buy? Nope. No. Why? Because the high is here and the low is here. So anything that happened within this leg is what? An internal structure. And we go to 15-minute time frame to actually look for what? The entry. Right on the 15-minute time frame, we still make use of what? The structure of the market, but in different lights. Look at. Okay. Thank God we have data. No. We don't have data to that back. So let's make use of this current trend on this particular price action here and see how we can actually navigate ourselves down toward the lower time frame. We know that the market is trending up, right? This market went all the way from this particular zone here and break the structure above this particular level here, right? Everything, that's why I keep telling you all this while just be buying this 25. Everything that happened here, they are all what? Internal what? Structure. Do we consider this particular level here as a break? No. This is just what? A liquidation. This is where the breaks actually happen, and we expect a pullback and a continuation. All right. Having known that, we can now then go ahead to plot out our what? Trend line. And to make your trend line valid is what? 3 touch points. But this is not all about trend line strategy. So we can go ahead to confirm how to actually enter a trade right from this particular what? Zone here on the what? Lower time frame. How do we enter from this particular zone? I pray we have a data to that level on the lower time frame. Let's go. Let's check. Come on. All right, bless God, we have it. So let me get rid of these. Then, oh, sorry. Right, look at this particular price action here. Come on the lower time frame, right? Look at this particular price action here. This market was creating what? Series of what? Lower lows, lower high, lower low, 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 lower high, lower low. Okay, we have a lower high, then we have a lower low. So at this very moment, the market will change what? Character. Exactly at this particular level here. This is what I consider as change of character. The moment we have this, we only look for what? Imbalance within this particular level. And the only imbalance we can see here is exactly at this particular zone here. Then, once we have this imbalance, as a result of value break change of character, we only place our order at this particular level here. This is our area of interest, right? The moment you place your order here, you always want the market to come tap on this particular order and go to take out the what? The overall liquidity residing the all-time highs or the all-time lows. So go to your chart, map out your structure correctly. And if you're confused anywhere, my WhatsApp line is in the description. You can hit me up with any charts and any correction will be made. Because until you get this foundation right, every strategy you trade, you'll be blowing account because you have to know where the market is coming from and where it is going before you can trade profitably. So if you're not yet subscribed, please kindly hit that subscribe button, turn on the notification in order not to miss the content that will be coming, because this is going to be in series of 1, 2, and 3, probably 4. Then this masterclass of market structure will be done. Until next time, keep practicing. Peace out.